Statistics South Africa will release the third quarter GDP data later this morning, with slow economic growth expected between July and September this year. Now, like many other businesses in South Africa, Seacom is an investor that is faced with many obstacles to grow since coming to South Africa 13 years ago. Newzroom Afrika's Ntokozo Khumalo spoke to Seacom this morning, and it's all about what they expect from the GDP numbers that are due later this morning.
Seacom has faced headwinds operating in the South African economy, with some of those challenges, of course, being load shedding, civil unrest, and a skills gap. And to help me unpack a little bit more on this, I am joined by Pranesh Padiachi, who is the Chief Digital Officer at Seacom. Thank you so much for talking to us, Pranesh. Now, let's start here. Since coming to South Africa, you have announced a number of ambitious plans for growth of your business at Seacom. What have been some of the impediments to growth for you in South Africa that has impacted the company?
Hi, thanks for. And yes, so when we started the company in 2009, we started the company as a subsea operator that sold transmission or bandwidth services to the South African customer base, as well as sort of economies in East Africa. We've evolved that business now into a fully managed services provider, so it allows us to provide services from pure bandwidth or simple bandwidth services all the way through to high-end managed services for enterprises, for consumers and the likes. We also cover a bunch of aspects around cybersecurity and those sort of things. So headwinds for us have been, for one, I suppose, and you've mentioned this already, sort of power availability. You know, when you live in a digital economy, power is key to all of that.
What are your expectations as Seacom when it comes to economic growth, and how you kind of put that in your strategic plans for the next year or 2 years?
Yeah, that's a tough one. You know, I think GDP in South Africa has been pretty much up and down for a long time now. I think with the current situation that we find ourselves in, with the sort of, and going back to the power outages, also the increase in fuel price and the likes, all of these are sort of influencing factors. If you just look at it from our perspective and what is done to our operating costs, which I think will play out into many markets, for us, for secondary power for us, pretty much diesel generators that we use, our fuel price to fuel those diesel generators have gone up 41% from January to today. So that's a massive increase. For one, we run the generators for longer, so we consume more fuel. Secondly, the cost of fuel has gone up, or cost of diesel has gone up 41% from the beginning of the year to now. And if you look at many other players in the market, those sort of operating costs start to play a major factor. So I think going forward, it's going to be a tough one. I think as we start to stabilize, though, and as the economy post-pandemic starts to open up, I think that will be a factor that will change it, but I don't see it having a major impact in the short term. I think as we go into next year, we'll start to see a different picture.
Let's leave it there for now. Pranesh, thank you so much for talking to us.